Finally, the South African rand remained steady in early trading as investors refrained from making significant moves ahead of central bank's interest rate announcement on Thursday. The South African Reserve Bank is expected to reveal its latest monetary policy, with most economists surveyed by Reuters predicting a 25 basis point cut to the main lending rate, while a notable minority anticipated no change. Earlier today, the rand was trading at 17.9 against the dollar, close to Tuesday's closing level. Meanwhile, on the local stock market, the JSE All Share Index rose by 0.24%, driven slightly higher by the top 40 index at 0.30%, although sector performances were mixed. Stock market analyst Mushima Gama provides insight on today's market movements.
The South African Reserve Bank is going to be announcing the monetary policy decisions tomorrow at around 1 o'clock. Now, the general consensus of economists polled by Reuters expect rates to be cut by 25 basis points, which is about 0.25%. Our prime rate is currently sitting at 8%. But yet again, a significant minority is expecting the Reserve Bank to leave rates unchanged. So very 50-50 sentiment that's looming around. But the fact that our inflation is currently below the desired range that the Reserve Bank wants to keep inflation, which is between 3 and 6%. Our April inflation is below 3%. That's enough. That's good enough reason for the Reserve Bank to cut inflation. But policymakers are also stressing the risks of US President Trump's trade wars, as well as our own political domestic affairs. The rand has, on the other hand, been enjoying a strong run against the dollar, trading below 18 rand. I mean, the last time we saw these levels was in December 2024. And this is primarily because the dollar has been weakening. So there's been a lot of risk-off sentiment towards the dollar. I do believe whatever the Reserve Bank announce, whether they're going to cut interest rates or leave them unchanged, the rand may just move marginally based on that information, but it will predominantly follow what the US dollar is doing instead.